People mambo.
Oh, thanks so much indeed. My name is Isaiah Opio. I'm a fraud and solution uh, manager at TransUnion Kenya, where we actually empower businesses to make financial decisions. So today I'm just going to discuss with you unlocking your business superpower, how data fuels hyper growth. And just to start, I'm going to walk you through some of the current state, and we're looking at industry evolution and emerging trend, importance of data, and maybe the way forward. Looking at it keenly, looking at the circle keenly, there's been a bit of resilience, especially of circles in terms of financial growth. And here I'm looking at a situation where when COVID actually struck, everybody knew the circles were going to go down because one, they didn't have robust systems in terms of how to serve clients on the digital platform. At the same time, they were facing a lot of things to do with unemployment. Let me talk about in terms of retrenchment. And many people knew that circles were not really going to bounce back. But if you look at the current statistic that was actually released by SASRA, it actually showed that regulated circles actually account for 6.666% of share of the GDP, which actually comes more or less fourth after the insurance, pensions, and also commercial banks that are actually leading at 49.82. But also looking at it keenly again, you'd find that regulated circles gross loans accounted for around 15.6% out of the loans that were issued in 2022. And also what is more interesting is that when you look at the non-performing loans, 8% regulated circles actually accounted for 8%, 8.40% of all the NPL, compared to banks or commercial banks that were doing 13.80 and microfinance 31.78%. Nobody would ever think that circles would actually have an NPL below 10%. And then also you looked at from the CESRA report, it actually showed that regulated circles still control 6.42 million members. And here, despite the fact that there was a lot of retrenchment that actually came during COVID, the circles have actually been able to bounce back. This actually shows some element of resilience of circles for hyper growth. And in this case here, looking at it keenly, the circles are ready for hyper growth. When you talk about hyper growth or talk about readiness for hyper growth, there's been a rise, what we call rise of digital circles. Based on SASRA report, there's been a circle that was actually licensed to actually as a digital circle. Remember before this, there's one of the telcos that actually muted a plan to come up with a digital circle where you don't need really to have physical presence. But I'm very happy that circles have been able to do that. There's also been emergence of diaspora-based circles. Currently, SASRA has already actually licensed 3 of them. Number one of them being Kenya US diaspora regulated circles, Grant Granite regulated circles, and Stoke Grant. These are circles based out of the country. And besides that, we've also been able to see some of the circles trying to venture into diaspora through diaspora banking. And that actually shows the readiness, especially for hyper growth. Again, we've also seen a number of circles venturing into what we call mortgage refinancing. Yes, through what we call Kenya Mortgage Refinancing Company, there are around 11 local circles that have actually partnered with them. And this is actually to enhance access to credit facility for mortgages, which today, if you look at statistics, it shows that less than 30,000 Kenyans have actually been able to get access to mortgages. Again, looking at what we call unfamiliar or untargeted sectors, yes, things we talk about agriculture, we talk about education, yes. SACCOs have also been able to venture into those sectors. Of course, commercial banks have tried to venture into education sector. There's not been any significant result to talk about. Agriculture as well, there's been no significant result to talk about. But today we find that SACCOs have actually been able to get into that. Then adoption of alternative channels, yes. I think COVID was more of a awakening call, especially for SACCOs. because one, they were found they didn't have robust systems, and this actually made them think out of the box. Today, there are so many local circles that one have partnered with the service provider for ATM financial services. A number of them have also integrated with PesaLink. Others are already offering services through USSD and apps as well. And some of them have also been able to actually leverage on existing agents to be able to serve their members out there. And lastly, because with adoption of alternative delivery channels, and here I'm talking about digital channels, fraud actually erupts. And in this case here, when the SACCO sector realized that fraud would actually come with the adoption of alternative channels, in 2020, there was an establishment of what we call SACCO Society Fraud Investigation Unit as a unit within the SACCO sector that actually helps to detect, prevent, and apprehend any incidents of fraud within the SACCO industry. And despite all this, the SACCOs should actually be able to or prepare for what we call emerging disruption, especially within the sector. And we're going to talk about first of all, we talk about the changing demographics. Today, if you look at SACCOs, there's a lot of most of the members of SACCOs are the old generation. So there's an emerging trend where there's exit of senior citizens actually leaving the SACCO because of retirement. And with this, SACCOs have not been prepared actually for the Gen Z membership. So this Gen Z membership, one, they would want to do things virtually, they would want to have digital channels. And so in this case here, as a point of disruption, SACCOs should actually be able to actually invest in digital adoption if they are to accommodate the Gen Z generation. And already there's already a bill in Parliament, what we call guarantorship bill, that actually we've passed into law, reflected into law, will mean that the SACCOs will not rely on guarantorship as a what we call a platform to actually lend out there, because the bill actually talks about that before the SACCO gets to attach the guarantor's property, they must exhaust all the existing assets of the borrower. And then also digitization. Yes, there's been an increased demand for virtual SACCOs, or what we call digital SACCOs as well. I've talked about SACCOs needing to, or they need to actually adopt digital channels if they actually have to serve the Gen Z membership. And also intense competition, yes. Or most SACCOs, you'd find that there are people who would come in, join a SACCO, but they don't borrow. What does it mean? It means they have actually to accommodate these guys. Because remember today, unlike before where you'd apply for a emergency loan, the SACCO tells you 24 hours, they ask you for reasons. Today, mobile loans are eating into that space. Why? Mobile loans, most of the SACCO members would actually prefer mobile loans because it is instant and the process is quite straight. So we've seen a number of SACCOs, the mobile emergency loans that they used to roll out before have been taken over by mobile loans. And also besides that, for SACCOs that don't actually generate good returns or declare good returns, most of their members, especially those with no borrowing intention, actually decides to go through money market fund, treasury bonds, which are actually offering lucrative interest rate or returns. And then also divergent product preferences. Yes, old products that were rolled out by SACCOs before are no longer relevant today, especially for the new generation. Especially for one, if you look at guarantorship platform, you'd find that a SACCO would require you to go to get a guarantor. A guarantor would insist that you explain why you need the money, what you do with the money, how you want to pay back. The Gen Z would not really want to go through theirs. And so it's actually a challenge to SACCOs actually to think about how they can actually come up with innovative products that can actually accommodate the Gen Z membership. And also rise in what we call digital fraud and cyber attacks that comes with what we call the digitization. And if you look at it keenly here, we talk about there's been a rise especially on incidences of fraud, which we've actually been able to see in the industry. What does it mean? It means that there have been reported cases of fraud within the SACCO industry, and this case here, you'd find that some SACCOs are still not more enhanced in terms of dealing with actually fraud cases. So if you look at it, the SACCO Society Fraud Investigation Unit was established by SASRA, and this actually was supposed to cater for all the cases. I mean, for SACCOs to report any cases that they have actually encountered. They've actually encountered, especially in regard to investigating with, I mean, in terms of fraud cases within the industry. What does it mean? It means that anytime there's a disruption, or there's a bit of fraud, you'd find that the SACCOs would actually report, the investigation unit would actually take it up, and with that they would actually be able to look into that. So what does it mean? Yes, the SACCOs are now adapting up, and one, they're able to actually deal with fraud cases. Dealing with fraud cases here mean that one, they're able to arrest the cases in good time, and with that they've been able to arrest some of the emerging trends within the SACCOs. Now, looking at it in terms of the future, especially in terms of SACCOs, I've actually prepared 3 cases. And before we get into that, we'll have to look at the pillars, especially pillars for SACCOs, for SACCO growth. And when we talk about pillars for SACCO growth, we talk about customer centricity. And customer centricity, you're looking at how much does the SACCO know their members. And here, when we talk about SACCO knowing their members here, we're looking at it in terms of 4 quadrants. We have I-savers and regular borrowers. This is the priority. I would call it the first priority of the SACCO. And here we talk about the key pillars of the SACCO interest earners. And here you find that these are savers who actually borrow, so they actually help the SACCO to actually generate interest. But also we also have the quadrant for where we have the I-savers but non-borrowers. Yes, these guys, they actually come in, but they have no intention to borrow. So what does it mean? They actually provide capital source for the SACCO. Then low savers, regular borrowers, these are guys who just come in, they borrow, they actually say the bare minimum, but the appetite for borrowing is actually high. And then lastly, non-borrower, non-savers. These guys are very quick to actually exit the SACCO at any particular point. So when you talk about customer centricity, we talk about how do we serve them and actually pursue their interest. Yes, for I-saver and regular borrowers, we have to give them cheap loans and returns. For I-savers, non-borrowers, we have to give them lucrative returns, and lucrative returns beyond what the market provide. And then for low savers and what we call regular borrowers, we need to give them loans not linked to savings. And then for non-borrowers and low savers, we have to look at how to actually contain them in the SACCO. Then the second pillar we talk about is risk management. Yes, unlike before when SACCOs used to lend based on guarantorship, things are actually changing. And here we're talking about the need to adopt risk management processes, and you talk about what we call risk-based pricing. We talk about alternative scoring and all that. Then the third pillar, we talk about operating model and fraud mitigation. Yes, fraud is not something that is far-fetched. It's actually, the SACCO is actually facing it as well. And then also what we call leveraging on data for growth and competitiveness. Now, I actually prepared 3 case studies, especially looking at how SACCOs can actually leverage on that data for actually hyper growth. Number 1 is use of digital onboarding for remote what we call remote onboarding or diaspora banking. So look at it from this point. There's a SACCO based here in Kenya, and they want actually to actually diversify into what we call diaspora banking. They don't need to have a physical office in every country to actually do a bit of to carry out onboarding process. What they actually need to do is to actually have what we call a digital onboarding capability or platform. What does it mean? This customer or a member or a prospect who is based in other countries would actually just download the app of the bank or of the SACCO, take a selfie, take a scan of the ID, and at the back end, based on data, we would try to match the ID and the selfie. And here we talk about how to authenticate whether the customer is who they claim they are. And besides that, would actually look at the device risk. As the device been associated with any fraud, is the email and phone risk associated with any reported fraud, and above all, whether this customer or what we call this SACCO member has been reported in any of the watch list or sanction list out there. So with this, the SACCO does not really need to more or less open branches across the country to tap into diaspora banking. They can actually be able to do that. And I was surprised, one of the cases where I visited one of the circles, and they were telling members you have to visit their office to actually activate your mobile app and all that. They don't actually need to do that. They actually need to leverage on existing platform for digital onboarding. Simple process, taking a selfie, taking a picture of the ID, the capability does authentication to verify whether the customer is who they claim they are. And with that, it becomes a seamless process. So number two, we talk about case studies. We talk about using data to understand members' product preference. The days of old products is actually ending. Why? Because the Gen Zs today do not have the patience to actually go through, or even they find those existing circle products to be quite historical and ancient and all that, and they want new product. For instance, they would not want you to give them money to go and buy a phone. Instead, they would actually want what we call buy now, pay later as a product. So with that, we are challenging circles that they can actually use data to more or less understand their membership. And here we looked at one of the circles here, and I'm talking about the digital, or looking at digital or mobile loan adoption. And if you look at that keenly, you'll find that majority, as you go up, you find that the appetite for mobile loans is actually increasing, as unlike down there. And if you look at it, you'd find that most old members are no longer interested in digital loans. And lastly, the mobile, what we call smartphone penetration, is quite high and is very, we actually recommend that circles really need to leverage on that. Case study number 3, we talk about driving growth and retention strategy using proactive analytics from bureau data. Unlike majority of circles believe that credit bureaus are just platforms where they dump data and all that, they can actually be able to use that data to drive growth and retention strategy. And I'm just going to pick around 4. One, they can actually be able to grow their portfolio, and here I'm talking about grow customers by increasing their limit. And here you look at what the customer owe you vis-a-vis what they owe the competition. And here I'm talking about competition at the banks out there. And in a situation where they owe you more, they owe the other banks more than you, then you can actually talk about more of actually getting them to come on board. Consolidation, the same as well. You try to pursue target customers for mergers or takeover. Like for instance, currently, what we call the CBR rate is quite high. There are so many circle members who have borrowed with the banks, but they don't even know how to come out of that high interest rate loans. So what happens? This is an opportunity for circles to actually pursue consolidation. The same with the defense. Defense here, we talk about the circles members have, if you compare with competition out there, the banks out there or other financial institutions, they owe money. They owe the circle more than they owe out there. And this would be an opportunity for the circles to actually defend their turf as well. And then also win back, meaning reactivating dormant clients as well, pre-delinquent monitoring, and collection prioritization, where we're talking about using data to actually optimize collections. Now, what are the opportunities in terms of leveraging on solutions for hyper growth? Number one, the increased CBR rate is an opportunity to grow loan book through cross-sell. That's an existing opportunity right now, and the circles need actually to liaise with the bureau, pick the data, check most of their customers, especially most of their members who are borrowing elsewhere, jump in, be able to see how they can actually win them back to actually grow their loan book. In terms of digital onboarding and KYC solution, yes, the circles do not need to reinvent the wheel. They are already providers of digital onboarding solutions that can actually solve for KYC in diaspora banking. Yes, they can actually do that. Credit risk solution, yes. The world is not about what we call subjective lending that used to happen in circle. Right now, we talk about objective lending, and the circles actually need to leverage on credit risk scoring. Collection prioritization, it is not an issue of spray and pray. We talk about targeted collection. Targeted collection means trying to optimize collection by bucketing collections based on the ease of collection. And this you can actually leverage on current existing collection prioritization model. And then proactive analytics, yes, any circle out there, and this is a challenge to all the circles out there, you will be surprised that some of your members, and a good percentage of your members, are actually borrowing from elsewhere. It is high time you actually leverage on that, get in touch with the credit bureau or get in touch with us. We'll be able to tell you what kind of product they're borrowing out there and what are the amounts. And the reason why they're actually borrowing elsewhere is because sometimes you don't have those existing products within you. And then we talk about fraud solution. Yes, there have been incidents that have actually been cited by SACCO Society Fraud Investigation Unit in terms of incidents of fraud. Yes, cyber attacks is also becoming high. So it's actually an opportunity for SACCOs to leverage on the existing fraud solutions that are available in the market. Now, in closing, yes, I would challenge SACCOs to focus on just the 4 pillars: customer centricity, getting to know your customer better. And in this case, we talk about if actually the senior membership were to get out of the SACCO, how would your SACCO be sustained? Risk management, we talk about risk solutions, digitization and fraud, and leveraging on bureau data for competitive growth. As I wind up, our company is TransUnion. We are out there we can actually be able to help you, support you in whatever you do by making trust possible. Thank you so much.